Hello students, welcome back. This is Ms. Mercado speaking. We are in Accounting 1303, Introduction to Accounting 1 course, and we are using the textbook College Accounting 23rd edition. Now this particular lecture covers Chapter 9. We will continue dealing with payroll accounting, but this time we're going to be focused on the employer side of it. Okay, so Chapter 8 that we covered previously was the employee component of calculating the payroll and the deductions. Now we're going to be shifting our focus over to the employer taxes and some of the reporting requirements that have to occur for when we have employees. Okay, so let's go ahead and let's get started. Now, make sure, like always, I know I sound like a broken record, but please make sure that you do read the chapter before you attempt any of your assignments. A lot of useful information is provided. And if you start your assignments before reading, you might get lost. Okay, some of this information is maybe familiar to you, but there's other components that might not. So I just recommend, get the reading out of the way and then start working on your assignments. It shouldn't take you very long to read. Okay, so in this particular chapter, the first two learning objectives are to describe and calculate employer payroll taxes and account for employer payroll tax expense. Now, the problem that I will be going over shortly does deal with this component. This is something that you're going to be seeing in your homework. This is something that you're going to be seeing in your upcoming test. Okay, so it is very important that we learn how to calculate employer taxes, payroll taxes, and how to be able to record these expenses in a general journal. Okay, so when we talk about employer payroll taxes, those taxes include FICA, FUTA, and SUTA. Those are the major components. Okay. So these are taxes that represent an additional expense for the employer. Okay, so when you're looking to hire an employee, you're not only going to look at how much is that, how much am I going to pay that employee? Well, I'm going to pay them $30,000. Okay, perfect. So you're going to pay them $30,000. On top of that, you also have to account for any FICA, FUTA, and SUTA taxes you are responsible for. Okay, so you have to incorporate in there. That's a reason when you do an analysis of, you're looking to hire new employees, you have to do an analysis. Okay, what is my budget? Okay, this is how much I'm looking to spend. Okay, that way you can figure out how much is it you're going to make an offer to that employee for when you want to hire them. Okay, because you want to make sure you stay within your budget for the organization. Okay, you do have to incorporate those payroll taxes in there as well. Even though you're not paying your employee those, you are responsible to pay from your own pocket those payroll taxes. Okay, so the components are FICA. Okay, so FICA is the Federal Insurance Contribution Act. Okay, now under FICA there's two taxes, and they're the same two taxes that we covered in Chapter 8, which is your Social Security and your Medicare tax. Okay, so both the employee and the employer have to pay these taxes. So for the employee in Chapter 8, where we covered it, the employee earned their wages, and then from there we deducted the Social Security and Medicare taxes. So we took it away from their paycheck. We deducted it. Okay. Now here, for the employer side of it, we have to pocket out these two taxes, Social Security and Medicare. So we have to put into an account this money because, at the end of the specific quarter, or depending on how you pay, you are going to have to get that money from that account that you have, and then you're going to have to submit payment to the IRS. Okay, so whenever you see FICA is comprised of two taxes, which is Social Security and Medicare. Okay, Social Security is also known as OASDI. Okay, something about old age survivor disability income or something like that. Okay, but it's basically just your Social Security and your Medicare tax. Okay, we also have FUTA. Okay, FUTA stands for Federal Unemployment Tax Act. Okay, and we have SUTA, State Unemployment Tax Act. Now, there's a difference between the two. The FUTA tax is utilized to pay for the administrative expenses of the federal unemployment program. Okay, so that goes at the federal level, and that the state unemployment is what is collected or put into your state unemployment bucket, you can say, in case you do have to have some layoffs or whatever the case may be. That is where you're going to be getting the money from to pay for that unemployment for your employees. Okay, so the federal is for administrative fees. the state is where you actually paid out your benefits from. Okay, and here we have an example of the entry that would occur for when the organization or the business has to record these payroll taxes. And these entries are done every time you have a payroll run. Okay, so if you pay your employees every Friday, then an entry would have to be done every Friday. If you pay it every month, then it would have to be every month. So every time employees get paid, we have to go in there and we have to do our payroll tax journal entry and calculation as well. Okay, so anytime you have your payroll taxes, you're always going to debit your payroll taxes expense. Okay, remember that expense accounts have a normal balance of a debit. That will always go in the top line. Okay, so under the payroll tax expense, you're gonna get the total of all of your payroll taxes. Okay, so that represents how much does the company have to pay in payroll taxes for the earnings that have occurred, okay, or that we have paid out to our employees. Okay, and then we're gonna go ahead and we're gonna put in our Social Security component. So we're going to put that into our Social Security tax payable account. All of these are payable accounts, which means they're liabilities. All of the liabilities have a normal balance of a credit. So what these accounts are, they're temporary accounts. We put the money in there temporarily. When we're getting ready to pay the different entities, the IRS or whoever we need to pay, we just grab the money that we have from that account and we submit payment. Okay, so these are temporary liability accounts. We owe this money to someone else. That is not our money. That is money that we're holding because we need to submit payment to other entities. Okay, so all of these payable, whenever you see payables, it will automatically be on the credit side. So we have an account to keep track of each of the different taxes individually. We don't want to get the information or the amounts commingled. So we have a specific account for Social Security. We have a specific amount for our Medicare. We have a specific amount for FUTA, and we have a specific account for SUTA. So depending on your calculations, those are the amounts that you're going to put in there as a credit. You add the different amounts, and then whatever total you get, that's what you're going to plug in your payroll tax expense. Okay, and I'm going to demonstrate an example of this shortly, so stay tuned. Okay, this is just an overview of some of the information in the chapter. Okay, now the steps that need to be followed when you're preparing your journal entry. There's about 6 steps, and all of this is in your textbook. Okay, the first thing you have to do, you have to obtain the total earnings and the taxable earnings from the earnings, total, and taxable earnings columns of the payroll register. So you must complete a payroll register so you can be able to do your calculations. Okay, so you're going to compute the amount of the Social Security tax by multiplying your Social Security taxable earnings by 6.2%. Okay. Then you're going to compute the amount of the Medicare tax by multiplying your total earnings by 1.45%. Now, look at the difference between 2 and 3. Okay, 2, it says compute the amount of employer's Social Security tax by multiplying by the Social Security taxable earnings. Okay, so let me see here, because there is a cap. Let me see what the textbook is using as the cap. Now these caps do change every year, but I do want to go based off of the information that is provided. Okay, and I found it. So on page 318 of your textbook, it does say that for purposes of this edition, we are going to be using a cap of 128,400. Okay, so I'm going to type in here. Okay, my cap is 128,400. Okay, so what does that mean? That means that you're going to pay Social Security taxes, okay, on the first $128,400 of your earnings. Okay, and you're going to pay 6.2%. That was provided here. Okay, so if you make from $0 to 128,400, you have to pay 6.2%. Okay, that is where they're asking you to compute the amount of your Social Security tax by multiplying the Social Security taxable earnings by 6.2%. So if you're between the range of 0 to 128,400, you're going to pay 6.2%. If you've made more than $128,400, then anything above $128,400, you don't have to pay any more Social Security tax. Okay, so it's capped at that amount. So you only pay taxes up to $128,400. That is very important. Now for Medicare, it says you're going to multiply your total earnings. Okay? So for Medicare, there is no cap. Sorry, there is no cap. So basically, you're going to pay Medicare taxes on everything. Whether you make $100, whether you make $1 million. Okay? You're going to pay 1.45% of your total earnings. Okay? So just be very careful on that, because it does cause a difference in your calculations if you don't take into account this cap for Social Security. Okay? So step number 2, you're going to compute the amount of your FUTA tax by multiplying the unemployment taxable earnings by 0.6%. Okay? So they're asking you here to calculate FUTA. Okay? Now on page 320, they explain how they arrive at the 0.6%. Okay? So the actual FUTA rate, okay? So the FUTA rate, let me do this in caps. The FUTA rate is equal to 6.0%. Okay? And then we have a credit that is given for state unemployment taxes. Taxes of 5.4%. Okay, so that's a credit. So therefore, your net FUTA rate is equal to the 0.6% that they're disclosing right here. Okay? Now, the rate is the 6% minus the credit that's issued out of 5.4, so your net FUTA rate is 0.6%. And this is applied to the first $7,000 of earnings of each employee. Okay? Let me move this up a little bit. Okay? And this is applied, okay, to the first $7,000 of earnings per employee. So here we're going to be looking at an employee level, okay, and the first $7,000 that of every employee, that whatever they make, we're going to pay federal unemployment taxes of 0.6%. Okay, so we need to keep track of how much each employee has earned. Once they go above the 7,000 mark, then we're not responsible to pay any more FUTA tax. Only on the first $7,000. Okay. And then we have, we're going to compute our SUTA tax by multiplying the taxable earnings by 5.4%. Okay, so that's the amount that they're using here for SUTA. Now, SUTA does vary. Your textbook speaks very little about it, but once, if you do take payroll accounting, we will go into more depth about SUTA tax, so I don't want to confuse you. We're just going to use what it says. They make it very simple. It's not as easy as it is. Each state has its own rates. In this case, they're asking us to use it based on the 5.4%, and that is what we're going to be using. Okay? So we have to calculate Social Security, Medicare, FUTA, and SUTA. And once we've calculated steps 2 through 5, then we're ready to prepare our journal entry. Okay? So these are the steps that encompass calculating your payroll taxes as well as journalizing. Okay? So on top of having to calculate your payroll expense, journalizing it, there's several reporting requirements and payment responsibilities that employers have. Okay? So the employer payroll and reporting payment responsibilities fall into 6 major categories or areas. The first being your federal income tax withholding and your Social Security and Medicare taxes. Okay? We also have your FUTA taxes, your SUTA taxes. Then you have to file your employee wage and tax statement. This is Form W-2. Okay? This is what is issued out to all employees at the end of the year. And this is what they use to do their income tax. Okay? So there's specific deadlines that need to be met. So there's a lot of information in the textbook about that. Then we have a summary of employee wages and taxes. This is Form W3. And then we have the employment eligibility verification, Form I-9. This basically ensures that the people that are working for you are able to work for you. They have their social security number, they've got either visas or whatever the case might be, to be able to ensure that they are eligible to work. If you hire ineligible people, immigrants, or whatever the case might be, if they're not qualified to work in the United States, you will be fined. Okay? So it's very important that you meet all of these requirements, that you do a background, that you verify your employees' identification, and complete Form I-9. Okay? There is a deadline that must also be met. Whenever a new employee gets hired, you have to submit Form I-9 within an established time frame. Okay? So most federal tax deposits are made using electronic funds transfer program. Okay? So what this is we've gone away from mailing checks. Now everything is paid electronically. So we go into a system, and then we log in. We create an account, and then we make our tax deposits through that system electronically. Okay. So there's two forms that are needed in reporting and paying your employer payroll taxes. So we have Form 941. This is the employer's federal tax return. The employer's quarterly federal tax return. And this particular form must be filed with the IRS at the end of the month following each calendar quarter. So the first quarter is January, February, and March. So it closes in March. So you have till the end of the following month, which will be April, to complete your Form 941. Okay, the same thing for the next quarter. So it'll be January, February, March. That would be due in April. And then April, May, June, that would be due in July, okay, so on and so forth. So it's just 1 month after the close of the quarter. And Form 941 basically reports the employee's federal income tax withholding, the employee's Social Security and Medicare taxes withheld, and the employer's portion of the Social Security and Medicare taxes. So the first two taxes are deductions from your employee's earnings. That's your federal income tax, Social Security, and Medicare. The third component is the money that the employer has to put in for the Social Security and Medicare components. Okay. And then we have Form 940. This is the employer's annual federal unemployment tax return. Okay. So, by January 31st of every year, the employers must provide each employee with a wage and tax statement. We already had discussed that. This is the Form W2. So they do give you the whole month of January to get that W2 done and submitted or mailed out. There's some companies nowadays that they send out emails that maybe you can request your W2 electronically. So you'll get that in an electronic version, whether it be electronic, paper, whatever the case might be. The employees must have received it by January the 31st. Okay? By January the 31st, also the employers must file Form W3 and a copy A of Forms W2 with the Social Security Administration. This chapter also touches on workers' compensation insurance. Okay? So workers' compensation insurance basically provides an insurance for employees who suffer a work-related illness or injury. Okay? Employers generally are required to carry and pay the entire cost of the insurance. So this is a cost that is specific to the employer. The employer will pay for the workers' compensation insurance. Now, the more that you use it, the higher the fee. Just like if you had car insurance. What happens when you have a car crash or you have a car accident? Your rates go up, right? The same thing here. If you have a lot of people slipping and falling or hurting their backs or doing whatever that they're doing, the more claims, the higher the rate of workers' compensation. So a lot of companies try to minimize, but if you do incur an accident at work, you must report it to your Human Resources Department, and they will provide guidance. They will complete the workers' compensation insurance form for you, and all of the pertinent information. So this is just an overview of some of the information in the chapter. Make sure that you do read the entire chapter. Now I'm going to dive into doing an actual problem. Now you will have something similar to this on your homework. you will look, or you will also find something similar to this on your test. It's very important that we learn and are able to calculate payroll tax expense and also learn how to prepare the journal entry. So, let me go ahead and read over. Let me just pick up my pen. I dropped it. Okay. So, we're going to read over the problem. This is coming from the end of your chapter. Okay. So, you can find this in your ebook. Or if you prefer, you can just print out this page. That way you can follow along as I am working out the problem. Okay. That way you don't have to be flipping back and forth. So the problem that we're going to be doing is problem 978. Okay. Let me just grab a piece of paper here. That way I can work this problem out. So I've got a copy of the problem because I don't like to be flipping. Awesome. Okay, so the problem says, selected information from the payroll register of Ebbeling's Dairy for the week ended July the 7th is shown below. The pseudo tax rate is 5.4% and the feudal tax rate is 0.6%, both on the first $7,000 of earnings. So what does that mean? That we're going to pay 5.4% for pseudo taxes on the first $7,000 of earnings of each employee, and we're going to pay 0.6% for our feudal tax on the first $7,000 of earnings. Once we reach that $7,000 mark, anything above it, we're not going to pay any more feudal or pseudo. We're capped at $7,000 for feudal and pseudo. Okay, so we need to be very aware of that and understand that. Okay, Social Security tax on the employer is 6.2% of the first $128,400 of earnings. So once again, our cap for Social Security is $128,400. If the employee goes above that, then we don't have to pay any more Social Security. Okay? And Medicare is 1.45% of gross earnings. Medicare does not have a cap. We pay Medicare tax on all of your earnings. Okay? So then we have the employee names. We have the cumulative pay before current earnings. Okay? So this is the amount that the employee has earned before this week's pay period. Okay? So this is the pay, the current cumulative pay before this next paycheck. Now, during this week, we have the weekly earnings. This is how much money each employee earned this specific week. Okay? So they're asking us here, then we have two columns, they've set it up for us, where we have to identify the taxable earnings for unemployment compensation and for Social Security. So we have to figure out of the $800, the $720, the $1,200, the $900, the $4,440, the $1,110, and the $1,260, how much of this is taxable for unemployment? How much of this is taxable for Social Security? Okay? And in order to be able to do that, we have to determine how much have they earned. Remember, we pay SUTA and FUTA on the first $7,000. So if the employee has made more than $7,000, like is the case of Aaron Foss, then we don't have to pay any more FUTA or SUTA. We're done. Now, the same thing for your Social Security. Okay, we have a cap of $128,400. Okay, so if you see here, this particular employee, Drew McMahon, has earned $127,050. This paycheck, this person made $4,440. So we need to figure out how much of this $4,440 is taxable. Okay, that is what we're needing to fill out here. So the requirements: calculate the total employer payroll taxes for these employees. Okay, before we do that, before actually calculating the taxes, we need to fill out these two columns and figure out what are my taxable earnings by employee. And then they're asking us to prepare the journal entry to record the employer payroll tax. Okay, so I've set up the problem here in an Excel document. Okay, so all I did is I copied and pasted my information. Okay, and I did that because I don't want to be scrolling back and forth. So all I did is I brought over my information, just like what is here. I copied and I pasted over here. Okay, now I need to figure out how much of this information right here, how much of my weekly earnings is taxable for my unemployment compensation. Remember, I have a cap of $7,000. Okay? So, if we look at Catalan Click, okay, we have to figure out how much of her wages for Catalan Click is taxable, okay, for unemployment compensation purposes. Okay, let me just quickly get something from right here. So we have to identify. This week, Catalan earned $800. Okay, so we know that she has earned $6,650, and I know for unemployment compensation we only pay taxes on the first $7,000. Okay, so what I'm going to do here is I'm going to get my calculator. Okay, so I know that my cap is $7,000. Okay? I know that this employee has earned $6,650. I'm going to subtract that. Okay? So I know that this employee still needs $350 to reach the cap of $7,000. Okay? Now, this employee earned $800. So what this means is that we are not going to pay taxes on $800. We're only going to pay taxes on $350, because what's going to happen is this $350 is going to take me up to my cap of $7,000. So you're only going to pay taxes up to the $7,000 mark. So once again, my cap is $7,000. I have earned $6,650. So I know I need to pay taxes on the next $350. So out of the $800, I am only going to pay unemployment tax of $350. So I'm going to do my unemployment compensation column first, and then I'm going to move over to Social Security. Okay. Now let's do the next one. Okay. The next one has earned $6,370. So I'm going to get the $7,000, and I'm going to subtract $6,370. So what this tells me is that this employee needs to pay taxes on the next $630. Well, this employee made $720. So what that means is we're not going to pay taxes on the full amount of $720. I'm only going to pay taxes on $630. That is going to take me up to my cap of $7,000. So my cap of $7,000 minus my cumulative pay, that gives me the amount that I need to reach my cap, which is $630. I made more than that. So part of it, I'm not going to pay taxes on. So I'm not going to pay taxes on $90, okay? That is not going to be taxable for unemployment compensation purpose. For unemployment compensation, I'm only going to pay taxes on $630, and that is going to take me to my $7,000 cap. Okay? Now let's look at Aaron Foss. Aaron Foss has earned $33,460. This employee has exceeded the cap of $7,000. So this employee, we're not going to pay any unemployment compensation. Okay? We're not going to pay any unemployment compensation because they've exceeded the cap of $7,000. Now we're going to look at Marcus Lenihan. Okay? Marcus has earned $6,930. So my cap is $7,000. He has earned $6,930. So that means that I will be paying taxes only on $70. That is going to take me to my cap of $7,000. Okay. So Drew McMahon has made $127,050. So this means that this employee has gone way above the cap. I do not have to pay any more taxes because we only pay taxes on the first $7,000. Mark Newell has also gone over the $7,000, so I'm not going to have to pay any taxes. Matt Stevens has gone over, so I'm not going to pay any taxes. Okay. Now I can get my total here. I'm going to add all of the amount for my unemployment compensation. Okay, so this is what it means. It means that out of the $10,430 that was earned by my employees, during this pay period, okay, I'm only going to pay unemployment compensation on $1,050. Okay, so your taxes will only be on the total amount. Why? Because a lot of these employees have exceeded the cap of $7,000. Now we're going to apply the same logic to our Social Security, but our cap now is much greater. Our cap is $128,400. So we're going to pay Social Security on the earnings up to $128,400. Okay? So if we look at Catalin has only earned $6,650. She still has a long way to go to reach this cap of $128,400. Okay? So what does that mean? That means that I'm going to pay taxes on the entire $800. I am going to pay Social Security tax because this employee still has a long ways to go to reach the Social Security cap. You pay Social Security on the first $128,400 of earnings. Then we go to Michelle. Michelle, the same thing. She's only earned $6,370. She has a long ways to go. So that means I'm going to pay taxes on the entire $720 that she has earned. Erin Foss has earned $33,000. Still has a long ways to go to reach the cap. So I know that I'm going to pay taxes on the whole $1,200. Marcus Lenihan has only earned $69.30. So that means I'm going to pay taxes on the entire amount earned this week of $900. Now we get to Drew McMahon. Okay, now Drew McMahon is probably a very important employee because he's making a lot of money. Okay, so Mr. McMahon here has earned $127,50. My cap is $128,400. So I am only going to pay taxes up to that amount. But guess what? This employee made a lot of money. He made $4,440 this week. So that means that part of this is not going to be taxable. So I need to figure out how much is going to be taxable. So I'm going to get my cap of $128,400. I'm going to subtract how much has this employee earned, which is $127.50. So that means that I am only going to pay taxes on the next $1,350 of earnings. Okay? Everything else above that, we're not going to pay any taxes. Okay? So we're only going to pay $1,350. And why are we going to pay $1,350? Okay, because my cap is $128,400. This employee has already earned $127.50. So I am only responsible to pay taxes on the next $1,350 of earnings, which is what I'm going to plug in there. Okay. Mark Newell has only made $35,000. They got a long ways to go to reach the cap. So everything that they earned this week is going to be taxable. The same thing for Matt Stevens. Matt has earned $38,000. The cap is $128,400. They still has a long ways to go. So everything that they earn this week is taxable. Okay. After that, we add our Social Security taxable earnings. Now these two amounts are very important because we're going to use them for our calculations. Okay. So what this means is out of the $10,430 that was paid out to our employees, I'm only going to pay me, the employer, unemployment compensation taxes of $1,050, and I'm only going to pay Social Security taxes on $7,340 of earnings. Why? Because some of these employees have gone above the cap. Okay, so we're gonna pay taxes only on the portion that is taxable. Okay, so now down here, okay, this part is just identifying your taxable earnings. Now to actually calculate your tax amount, we're going to use these numbers to do our calculations. Okay, so the first thing I'm going to start off with is my Social Security tax. Okay, so we're going to look at our Social Security column here, taxable earnings. So we figured out that $7,340 was taxable. My Social Security tax rate is 6.2%. Right there. So I'm going to get my calculator out. 7340 times 6.2%. That's going to give me $455.08. So that is the amount of Social Security tax your employer has to pay. Now for Medicare. Medicare does not have a cap. Okay? So I am going to pay taxes on everything that the employee has earned. Okay? So let me maybe do some lines. That way we can see where. So I'm going to get this one for this one right here. And I'm going to maybe do this one in this color. Okay? Now for Medicare, I'm going to get the information from right here. Okay. From right here. Blue here. So I'm going to get the 10,430. My Medicare tax is 1.45%. So I'm going to get my calculator out. And that will be 10,430 times 1.45%. That's going to give me 151.235. So we have to round. So because this third digit is a 5, I'm going to round up. And this will now be 151.24. Okay. So make sure that you look at that third digit. If it's between 0 to 4, you keep this at 3. If it's 5 or greater, you make this a 4. Okay. Now we're going to do our FUTA tax. Okay. For our FUTA and our SUTA, we're going to be using our unemployment compensation information. Okay. So, for my FUTA tax, I'm going to get my 1,050 right here, and I'm going to multiply it times 0.6%. So I'm going to get my calculator out. 1,050 times 0.6%. That's going to give me $6.30. Okay. And then for your SUTA tax, we're going to get the 1,050. And the rate that was given to us was 5.4%. So where am I getting this from? From the problem. It says here your SUTA tax is 5.4%. Okay. Right here. Okay. That's where I'm getting the 5.4%. So I'm going to get my calculator. It'll be 1,050 times 5.4%. It's going to give me 56.70. So once we're done, we're going to add all of our employer payroll taxes, which is 455.08 plus 151.24 plus 630 plus 56.70. Okay. I'm going to get a calculator. So it'll be 455.08 plus 151.24 plus 630 plus 56.70. That'll be 669.32. Okay, I'm going to save this. Okay. Now we've done all of the calculations. First, we identified how much of our weekly earnings were taxable for unemployment and Social Security. For unemployment, we pay unemployment taxes on the first $7,000 of earnings. So out of the weekly pay, how much of it is taxable for unemployment purposes? For Social Security, we have a cap of $128,400. how much of it is taxable for Social Security purposes. Once you have a total for each of those categories, then you just apply the different rates provided. Social Security is at 6.2, Medicare 1.45, FUTA 0.6%, and SUTA 5.4%. Okay? Now that we have this information, the journal entries are a piece of cake. Okay? We're going to use this information to journalize our entry. So, this is happening as of July the 7th. Okay? So the first thing that we're going to do is we're going to get our payroll taxes expense. Now this amount is coming from right here. Okay? The total is $669.32. Okay? So that is your total employer payroll taxes, $669.32. Okay? Then we're going to have our different taxes. So we're going to go ahead and we're going to pay those taxes and we're going to put them into our payable. So I'm going to have Social Security tax payable. And that amount will be the $455.08 that you calculated right here. $455.08. The next thing we have is we have our Medicare tax payable. Okay? And that Medicare is coming from right here, the $151.24. Then we have our FUTA tax payable, and that amount, we're getting it from right here, FUTA, $6.30. And last but not least, we have our SUTA tax payable. And my SUTA tax payable is $56.70. $56.70. Okay. So we entered 669.32. 450. I'm sorry, I entered this incorrectly. This is not 455.05. This is 455.08. So I made a mistake, and you see that's why it helps you have your totals down here. I was not balancing. I'm not balancing because I entered that wrong. It should be 455.08. This is what the amount that we calculated right here, but I had typed it incorrect. So now my debits and my credits equal 669.32. Remember that you always double check that, because just like what I did right now, a simple mistake, I typed a 5 instead of an 8. That was causing me to be off. Okay? So now you have recorded your journal entry. You have your payroll tax expense of $669.32. This is how much you spend on payroll taxes for your employees, which includes Social Security, Medicare, FUTA, and SUTA. Okay? And we have all of the calculations of how we came up with these numbers in this sheet right here. So make sure that you do complete your assignments on time. If you have any questions, please do not hesitate to send me a Blackboard message or contact me or stop by my office during my scheduled office hours, whatever works best for you. But do make sure to please read the chapter, review the PowerPoint information provided, listen to this short video, and then attempt your homework. And if while you're attempting your homework you get stuck, you have any issues, then reach out to me, send me a screenshot of what you're doing, your calculations, so I can be able to look at it, review it, and provide guidance. Okay? So that is it for today. See you next time.